Shopify just delivered one of the most impressive earnings beats of the season. The stock shot up nearly 20% in a single day. But is this just short-term excitement or a signal of long-term value? In this video, we'll break down exactly what's happening with Shopify, analyze its business model, review its latest earnings, evaluate its short-term and long-term growth prospects, and finally ask the big question, should you invest in Shopify right now? Let's start with the news. Shopify reported its second quarter results for 2025, and they smashed analyst expectations. Here are the key highlights. Revenue came in at $2.68 billion, up 31% year over year. Gross merchandise volume, or GMV, was $87.8 billion. Net income was strong, and operating margins expanded. The company gave strong guidance for Q3, expecting mid to high 20% revenue growth. The stock jumped nearly 20% after these numbers were released. The reaction wasn't just about revenue, it was also about confidence. Shopify is proving it can grow at scale, even in a challenging macro environment. Shopify is much more than a website builder. It is a full-stack e-commerce infrastructure provider that powers over 1 million businesses around the world. Here's how Shopify makes money. Subscription revenue. Merchants pay a monthly fee to access the platform. Merchant solutions. Shopify earns transaction fees, processing fees, and additional charges from third-party app integrations. Shopify payments. Their in-house payment processor, now widely adopted. Shopify Capital. They offer financing to merchants in exchange for future revenue. Fulfillment and logistics. They are building a fulfillment network to compete with Amazon. New AI-powered tools. These help merchants create storefronts, generate product images, write descriptions, and automate customer interactions. Shopify has evolved into a complete commerce ecosystem, handling everything from store setup to checkout to delivery. For short-term traders or swing investors, Shopify looks attractive due to the following reasons. Momentum is strong after the earnings beat. Institutional buying is supporting the price. The Q3 revenue outlook is better than expected. AI tools are being adopted quickly. International growth is accelerating, especially in Europe. However, there are also risks to be aware of. Valuation is high. The forward price-to-earnings ratio is above 80. A disappointing next quarter could trigger a sharp pullback. Macroeconomic factors like interest rates and inflation can affect consumer spending. Still, if market conditions remain favorable and Shopify meets or beats Q3 expectations, the stock could continue to move higher in the next few months. Now let's talk about the long term. This is where Shopify becomes a very interesting opportunity. Shopify is positioning itself as the go-to platform for global e-commerce infrastructure. It's not just for small businesses anymore. Enterprise clients are coming in too. Key long-term growth drivers include AI innovation. Shopify's new tools are helping merchants automate and scale faster than ever. Expansion into new geographies. Shopify Capital is now live in Germany and the Netherlands. Growth in international GMV. In Europe alone, GMV grew 42% year over year. Improvements in logistics and fulfillment. Shopify is building a network to rival Amazon's, giving merchants more control over shipping and returns. High retention rates. Over 80% of merchants renew their subscriptions. The total addressable market for Shopify is massive, estimated at over $300 billion globally. Analysts project revenue to grow at 25 to 30% compound annually over the next 5 years. That is impressive. No stock is risk-free, and Shopify has its fair share of challenges. Here are the top risks. Competition from Amazon, BigCommerce, Wix, and Squarespace. Economic slowdown risk. If a recession hits, small business spending could decline. Valuation pressure. High-growth stocks often suffer sharp declines if they miss targets. Dependency on small merchants. Though enterprise adoption is growing, Shopify's base is still smaller merchants who are sensitive to economic shocks. Despite these risks, Shopify's competitive moat is expanding. Its ecosystem, brand recognition, and innovation speed make it very difficult for competitors to replicate. So what's the final take? If you're a short-term trader, Shopify has momentum and strong fundamentals. It could offer upside over the next few months, especially if Q3 results come in strong. If you're a long-term investor, Shopify is one of the best plays on the future of e-commerce. It's building a platform that could one day rival Amazon in reach and scale, but from a completely different angle, where merchants retain control. However, you need to be comfortable with volatility. This stock won't give you smooth returns. It will swing and swing hard. But if you believe in the long-term story, these swings are opportunities. Ideal strategy: build a position slowly, add on dips. Treat it like a high-growth satellite in your portfolio, not the core. What do you think about Shopify? Is this stock a future e-commerce giant or an overhyped growth play? Let us know in the comments. And if you enjoyed this breakdown, don't forget to like the video, subscribe to the channel, and turn on notifications for more deep dive stock analysis like this one. Thanks for watching. Until next time, invest smart.